Well, talking about things that are South African, speaking about the currency is about a South African as braai and chicken dust, and the rand is one of the most actively traded currencies in the world, and therefore we're constantly reminded of its wild swings and jitters, which is always aided and abetted by our politicians, of course. But my next guest is someone who knows all about forex trading. He's frequently quoted in a variety of global media, in the Financial Times, in the Wall Street Journal, Reuters, Forbes. He's a regular market commentator on CNBC Arabia and Bloomberg Malaysia. He's Jameel Ahmad, Vice President of Corporate Development and Market Research at FXTM, which is FXTM to be entirely accurate, and one of the global forex powerhouses. Jameel, welcome to the country.
Thank you very much for having me, and it's really great to be in South Africa, and I'm thankful to be in Johannesburg.
What are you doing in the lovely city, the big smoke of Johannesburg in May?
On a personal level, I've always wanted to visit Johannesburg, but FXTM have recently acquired a FSB license, the South African license, and actually what we're doing in Johannesburg this Saturday is an online workshop. We see, on-site workshop, apologies. We see huge demand towards learning how to trade Forex, interest in the Forex market, how it works, and what we specialize in is financial education. So we're doing a workshop this Saturday and then in Durban this Sunday.
Well, you're certainly not here for the weather at this time of year, which has been absolutely miserable and cold. Someone left the fridge door open. If we look at the rand, I mean, from your perspective, I said in my introduction, it is one of the most highly traded currencies in the world. And today we see the rand strengthening quite a bit at the moment. We've seen globally this rise of the right wing, and obviously that's going to have an impact on our trading and existing trading agreements with Europe. If you look at the likes of Brexit and Emmanuel Macron, what's happening in France, what should South Africa be doing about this?
Let's start off with the rand. My personal opinion is that the rand is still completely oversold at this point. These market fluctuations were very wild and they were driven by different issues. As an economy, South Africa's performing well. So let's now go into populism, because this is what we're talking about, political risk in the developed markets. We've got Brexit, United Kingdom, British pound is still vulnerable to a lot of pressure moving forward. We've got Donald Trump and his so-called protectionist policies, which so far we haven't seen much come to fruition. I believe that the dollar is probably overbought, which is very good for the rand and other emerging market currencies. And then we've got the euro. Euro looks like it's defeated populism at this stage. The French and the Dutch elections did not go quite the way that people feared. Euro's definitely underbought. In my view, it should be much stronger than what it is. Talking about trade deals, so basically I think the United Kingdom is going to be on a lot of pressure to secure a decent trade deal with the European Union, And I also think that because economic data in Europe is picking up, it's picking up a lot of momentum despite political news dominating headlines with elections. I think that Europe might not need the UK as much as the UK would have hoped, and when I link this back to South Africa, it means that the UK is going to be looking for more global trading partners and trying to diversify away from Europe.
Oh, that is very interesting. It's a great opportunity for our farming industry in particular, who perhaps under Brussels didn't have the sort of access that they would have liked to the UK market and can now sit down and trade bilaterally with the UK. But talk to me about the rand, as you said right up front, being oversold at the moment. What would you see as a fair level for the rand? I know purchasing power parity probably has it closer to 10. A lot of people saying, well, that's a lot of political risk built into the rand at 13.
This is actually what's driven the currency in recent times, is political risk. And South Africa's not isolated in this, because it's something we've seen in developed economies, Britain, United States, a lot of volatility there. And even in other emerging market economies, I remember the Malaysian ringgit. I know it's very far from here, but 2 years ago it had a lot of political risk stamped in its currency. The Turkish lira has been smashed to pieces in recent times, 18 months or so.
The zloty?
Yeah, because of political risk and different fluctuations. As an economy, South Africa's performing okay. The risk now with the volatility in the currency is that it's going to lift inflation pressures much higher in the next couple of months. So that's one risk the economy is going to look out for. But if the dollar does take a smashing, emerging market currencies are going to gain the most. So those currencies that probably are oversold at this point, South African rand, Malaysian ringgit, will benefit from any rainy days for the dollar.
And very, very interesting, we had our own central bank governor, Lesetja Kganyago, saying today that he thinks raising interest rates isn't going to lure any more investment following our own downgrade to sub-investment grade. So it looks like the central bank certainly won't be in a rate hiking mode. A lot of people thought that that might be on the cards following the downgrade, just to support the currency perhaps. What do you make of the downgrade?
Actually, talking about central bank policy, I believe that stability is very important right now, because we've seen in the past when currencies have been smashed that central banks have tried paying what turns into be hot potato with the currency. I don't know how many viewers or listeners know about the Russian central bank. 2 years ago, the ruble absolutely exploded with the Crimea conflict and Russian sanctions. The central bank all of a sudden had its back right against the wall, where it raised interest rates once, twice, then it did it by about 3-4% in one night, and the ruble exploded because investors lost confidence. So in some ways, stability with central bank policy, interest rate policy, can go a long way towards stability for the currency.
A steady hand on the tiller. That's exactly what we need after we've seen a change in our treasury, in the finance minister. And to go back to my earlier question about the downgrade to sub-investment, that was on our foreign currency debt, not on our local currency debt. But what impact would you see that having on the rand over the medium term?
Actually, if I'm being honest with you, the rand impact of a downgrade over the medium and longer term is not that much. Is short-term price volatility, so near-term movements. What would impact the currency much more over the medium and longer term would be economic data, how investors look towards the dollar, and even risk appetite. So, for example, if we have wide risk appetite in the markets, this means where investors are lured into the stock markets, they're likely to be attracted to emerging market assets, which is good for the rand. If, on the other hand, investors get very worried over Brexit, UK election next month, and we see risk aversion in the markets, such as following the EU referendum, this would be a bad day for the rand.
And the Italian election is the other one that the market's going to be keeping a beady on.
There's another Italian election?
Well, the one that...
No, there's always government reshuffles in Italy.
Yeah.
It's quite possible that there's going to be another one. What I mean is that Italy's no shorter to political news and some volatility there. What I've got my eye on the cards right now is the UK election in just 4 weeks' time.
And looking at the way that that will pan out, or most likely pan out, considering that Theresa May called played her hand quite early, shall we say, on the referendum. But how do you see that playing out?
Theresa May is very brave. This is what my viewpoint is, that she's definitely putting her hands on deck and saying, I can drive UK towards a stronger Brexit. I'm the person who's going to lead the negotiations, and I need more power. So I want to be elected, generally, to show that I am the rightful UK Prime Minister.
And Labour seems to be in disarray over there, so it's not like she's got the strongest opposition at the moment.
That's correct, but the problem with this for investors is that investors have completely underpriced the risk of May losing. And only 1 year ago, investors completely underpriced the risk of a Brexit. And it's always those kind of risks and underpricing which investors have to pay attention towards, because it can lead to huge rounds of volatility on the markets.
So, left field, let's say there's a 10-15% chance that May does lose, and we see a Labour victory, or that tries to take the UK out of this Brexit scenario, that tries to reverse the triggering of Article 51. Is that possible, or is Brexit now baked in?
I wouldn't say it's necessarily baked in, but what I would say as a Brit myself is that 1 year since the vote and the outcome, nobody has any idea what's really going on. All we know is these Brexit negotiations are supposed to take 2 years. Nobody expected another general election, but we've got one. There's a lot of uncertainty for the United Kingdom. Economically, market-wise, are they going to lose EU single access? What's going to happen to London as a financial centre? I'm actually bearish, which means I expect selling pressure on the pound.
Selling pressure on the pound might mean a good investment opportunity if you're South African, and more longer-term bullish on things like British property, for example, which has been a long-term secular bull market. But we're talking about currencies. If we were to look at some key factors for the rand to strengthen from here, from where we are, you said primarily the politics is noise. We're looking at macro data. We're looking for economic growth. And obviously we're looking at what's happening in the US. What sort of growth numbers would we need to see from this level in the South African economy? It's been flatlining for the last 2 years.
Actually, to be honest with you, what the data needs to show now, that the currency fluctuations not had a negative impact. So we need to look at FDI investment. We have to look at other economic data, consumer data, so specifically numbers like retail sales or whether it's manufacturing PMIs, to show that this recent movements, reshuffles, hasn't actually impacted the economy on the ground. Now, on the larger scale of things, South Africa is still an emerging market currencies, and all emerging market currencies are always very sensitive to the US dollar. So if Trump keeps shouting that the dollar needs to weaken, the dollar needs to weaken, the dollar needs to weaken, and if it does happen, it's very good. But there's a two-way scenario here, because Trump's saying he wants a weaker dollar, but yet he's also promising that he's going to be this fantastic president. He's going to lift US growth to levels of 4% at least, which should be strong for the dollar as well. So what we're seeing now, it's still uncertainty.
There's a cognitive dissonance in what's happening in the US, and then we've also got his political actions, firing the head of the FBI, now admitting to sharing information with the Russians. We've got the Germans coming out saying that Donald Trump is a risk to Western security.
I didn't know that Germany has said that today, but I'm not surprised at that, or anybody else who would have said that following the news overnight. Look, political news is now driving the financial markets in ways that I haven't seen before. If I take you a little while back, political risk used to be something that we associated with emerging market economies. So it's not a new thing for South Africa. It's not a new thing for some Southeast Asian countries and economies. But major economies like Britain and the United States were traditionally seen as very safe. And this year, or in the past year, that's changed a lot.
And I suppose it's good news for an emerging continent like Africa to say, well, we're not as risky as you may think. Look at what's happening in those traditional safe haven markets of the developed West.
Exactly. I'm surprised as a Brit myself. I haven't received more jokes about Brexit and what you guys actually voting for. Do you know what you're voting for? This is happening now. It's impacting financial markets, and I think that investors are actually becoming more attracted towards learning more about forex, not necessarily not necessarily as an investment class, but because you're seeing political volatility and financial market movements, and it's becoming interesting.
Now, just before we wrap up, and turning to sort of the art of trading here, Jameel, because when it comes to currencies, most experts say leave it to the experts because it can be so volatile and difficult to predict. But you've got an ebook called The Habits of 50 Successful Traders. What are some of the key habits that you can distill into one or two bits of really good advice for people who want to go out there and trade currency pairs?
That financial education never stops. And if you are a retail investor out there or a mature investor out there, you need to continuously learn, because we talked just in the previous question about how political news is driving the markets. This is something that maybe 1 year ago investors would ignore. So even mature investors are learning this now. Education is very important. Trading itself, it can be lucrative. It can present lots of opportunities. However, it is a skill that you need to develop. It's not something you can pick up overnight. It takes practice. You need to be learning in good environments, risk-free accounts, which means demo trading to build some confidence first. It's not something you just jump into.
And I think the problem is there's so much clickbait. There's so many snake oil salesmen out there saying, well, you can get rich overnight by trading Forex or becoming a weekend trader. And people go without the education, without putting in the hard work, and lose an awful lot of money. And then it kind of tars the entire sector with the same brush.
As a broker, FXTM, we like educated clients. We invest heavily in client education, and that will never stop. We are completely committed to this.
Well, Jameel, great chatting to you. I'm sure it won't be the last time, but we're going to have to leave it there.
Thank you for having me.
That was Jameel Ahmad, Vice President of Corporate Development and Market Research at ForexTime. And if you want to learn more about trading, then you can follow me at Michael J. Avery. I'll be tweeting some more tomorrow night when we host a panel before the African Traders Summit. You're listening to Classic Business.